Hey there, welcome to the channel. So today is Sunday, 2/20, February 20th. Just going to do a little update to see what's going on in the stock market. Okay, so we really have kind of the overhang of several things going on, right? The first is, and the most immediate is, what's going to happen in Ukraine? Is Putin going to go in? Is it going to attack? Or, what's going to happen there? We can't really know. But if something happens, you would expect some really fast and immediate volatility in the markets. The other thing is we have this recurring theme of, very high inflation. We had producer prices coming out last week and, fairly higher than expected. The implication there is producer prices still going up would tend to imply that consumer prices would continue to go up for a period of time. So we would be looking for an inflection in producer prices, which are the input costs to things that are made or services that are delivered. We'd expect that to have to inflect down first before we would expect that in CPI. Now, I'm not 100% sure on that relationship, but that's kind of the situation that we're in. We have a Fed that's pulling back on liquidity right now. They are cutting back on their bond purchases as we speak, supposedly. And we have the uncertainty in Ukraine. So let's see what that's doing to the market. So looking at the SPY here, the ETF for the S&P 500, we had this really, we had a decent sell-off back over here. Over here, we had the sell-off, found, created a little area of base, and then we had our smiley face pattern here. We had these two island tops, little tiny island tops, it looks like. Very small, gap up, hang out, and the next day give it all back. Gap up, hang out, next day give it all back. That type of a situation seems to be happening. So that's what we see in the overall markets. Now we had more selling on Friday. So I think that very clearly one of the issues will be is, looking for this support. Hey, are we going to find support here in this 430 range? Or I mean, we could draw the lines a couple different places. We could say, hey, look, support back here at 425, 430. We're going to find that support. See, we did find it here. We did find it. We came down and came right back up. So we'll see what happens. I assume that if something happens bad in the world, that we'll just break through all that stuff. Also, just really quick note the volumes down here. So high volume selling on these days down here, looking down here, see high volume selling back here. And then this week, we had high volume selling above average, like especially on Friday, there was a significant amount, but we covered a little in the day. So maybe part of that was actually up volume, hard to say. So then looking at the NASDAQ, QQQs, similar kind of situation here, but it's closer to being at the lows. So we can see that it's in a riskier position from the point of view that if it opens up down a little bit, it's going to be below the lows, recent lows. And so it's basically could, in theory, break that support. IWM, this one has been weaker than all the other ones. Not all the other ones, but pretty much weaker because the sell-off here was just brutal. And, it's more to go before it breaks through the recent lows. Now, take a little quick look at ARK. Now, ARK K, the innovation fund, this thing has gotten beaten up, and it really got beat up again last week, the end of last week. Very interesting here, just strong selling days here, just strong selling. So don't know. They're still beating the crap out of Kathy Wood's funds there. So what I had pointed out on Friday, the thing that I want to look at and find very interesting here is the relationship between gold and the dollar. So let's look at the gold. I noted on Friday that, hey, look, we have gold had this huge base, just huge base, this whole period of time, this kind of basing, whatever, and it's kind of a wedge type of a base. But see, the thing is, it's breaking out. The last 2 weeks and last week, it really broke out. So from my perspective, this is something to pay attention. It looks like, and it sort of looks like, you have this breakout of a 1.5 year long base in gold. And it looks like it's finally breaking out. So that's something to keep in mind and look at. Now, one of the problems that you have is if gold is breaking out, well, then we have to look at and also look at the volume, at least on GLD is this obviously an ETF. So it's not, but correspondingly, the volume picked up here, strong week above. So let's look at the dollar, see what the dollar is doing here. If we look at the dollar, as I've pointed out in several of my videos, the dollar has this, huge base in here, just huge W type of base. Another situation looking at a year and a half long pattern playing out here. But as it stands at this point, we still kind of have, it looks to be, we still have this kind of uptrend. Now it's possible this uptrend is being broken. We're touching here, here, here. This one didn't quite touch, but we're still in an uptrend. But in the short term, you've had this 1, 2, 3 months or so of going nowhere, right? So it's kind of just been in a range. So it looks like some of the momentum has come out of that. And now the question really, one of the questions that I have, because, maybe I would like to have some gold is, well, okay, if the dollar is going to keep going up, maybe the milkshake theory for what's his name is still actually playing out. Well, isn't that going to put pressure on gold? So how do I resolve the fact that, well, look, it looks like gold's kind of breaking out. Dollar's still in its uptrend. I mean, it's kind of weak a little bit, but you still have this huge base underneath it. And yeah, you're getting to some resistance. But okay, so let's try to resolve that. Do we have any idea what could be going on there? One of the things we can do here is red is UUP, red dashed is the dollar, and gold is in gold. And what you notice is, if we look at this chart, this is a long-term chart that we have, these are years, weekly chart over years. So we're looking like 7 years of data here on this chart. So let's go ahead and look at that. Back here, you see gold kind of going down and kind of in a consolidation range, dollar kind of in consolidation. But then you see dollar has in red here. Dollar has a quick move up. Gold continues to kind of work its way down. Okay. Then we don't have much going on and there's some smaller movements, but I want to focus in on this little area here. This is an interesting area of time. And this is in 2018 and 2019. If you look at this period of time, both gold and the dollar are going up together. So for whatever the macro reason for that is, I don't know. 2018, 2019, this is before the cerveza sickness. I'm not sure what was going on. I know what's going on. There was a rate rising cycle going on. He was raising rates. Let me go look at that. Okay, so we want to look at again, this region of time to see kind of what's going on during this period, 2018, 2019. We saw this period where both the dollars going up together and gold going up together. And what was happening? Look at this guy, Fed funds rate. During that time, the Fed funds rate, which had been zero since the great financial crisis in the bottoms of 2009 for like over 10 years, been at zero. The purple line here, the Fed was raising rates at that time. Look at, they were cranking rates here, let it sit. They were cranking rates during this time. And it's very interesting. They look like they got rates up to like 2.8%. So they cranked rates. And during that time, they're cranking rates. That's very interesting. Yes, they were cranking back here. Nothing happened. But in this period here, we had this dollar going up, which you would expect, but actually the gold was going up too. And that's kind of interesting. Why would gold go up with the dollar and why would it go up with rising interest rates? Not quite clear, but it's something to note. So if you're looking at it and you're trading, and this is not financial advice, but if you were looking in a situation and you're saying that, hey, I think gold, I should have some gold. Okay, fine. But then if you're trying to resolve, well, but look at the dollar, I should maybe have the dollar. Okay, well, how do you resolve that? Well, maybe this is how you resolve it. The issue is that during this period of time, in this couple of years, we had both going up. Then the rates came down. Both are very interesting because as you look at this, they were both going up together during 2018, 2019, 2020, we get basically the dollar starts going down, but then we have this huge problem with the cerveza, basically the shutdowns, all that stuff happened in this time, right? March. But now what do we have here? We both have all these. And as I pointed out, the gold is kind of like a wedge type chart. It's a big consolidation. So in this period of time, they're both consolidating, slightly different patterns. You have gold with kind of like a wedge, okay? Gold wedging, but dollar is also consolidating. It is like kind of a cup and handle, AKA, what's his name? IBD. Cup and handle going on. So one of the things that we could draw from this, is it possible that dollar gold going up together, dollar and gold both period of consolidation? Is it possible that dollar and gold are both going to have a period where they continue to go up together? Maybe that corresponds with something underneath the market when they're raising the Fed fund rate. So when they start raising in March. This looks like an interesting setup to me. So this is not financial advice. It's just something to note, something to kind of look at and keep your mind on, because this is actually really fascinating. So that is all for that. We'll have to deal with the volatility that comes up. If we look at one thing that I'm noticing is like TLT here. This is the 20-year plus bond ETF. You can also look at TLH, which is the 10 plus year. That one has a little less volume. This one on the weekly, 100 million shares, 80 million shares, very liquid. But what we notice here as well is that, hey, we're coming down into a support region. We're coming down to support. And actually, I think see these wicks, see how it's kind of like little hammers in these last 2 weeks? Because it appears to be, my guess is it's finding some support in here. So now we have a potential setup where you're kind of looking at it. Well, what would happen with TLT? Is it possible that bonds are people are going to be buying bonds? So if they bought bonds, bought the TLT, interest rates would go down. Notice this, look at the wicks, hammer over here. But when we go look at the 10-year, what do we have? The inverse of hammers. We have these flying wicks up to the top. So in the short term, this volatility, and I know it's very hard to see, and I will try to zoom in on that over here. You can see these flying wicks. So you can see that in the short term, there's some buying coming into bonds, because if there's volatility in the market, if something happened in Ukraine, it's very possible that people will just run into the dollar. They will run into gold. They will also just run into bonds. Big money is not like us little guys. You know, we can go and take a $300,000 portfolio and go, oh, I'm just going to sell the whole SPY, just boom, sell. They can't really do that. They can go out there and they can say, well, we're going to swap whatever. We're going to swap 100 million out of our $10 billion fund. We're going to start swapping like 100 million a day for the next week into bonds, take them out of equity. They can do that kind of thing. They can't necessarily go to cash. So they have different constraints. So that's another thing to keep in mind. I think the bigger picture stays. The Fed's going to have to raise rates. They're going to have to continue that. The whole situation with Ukraine is going to interrupt that if it happens. But that's a short-term interruption. That's not a long-term. Short-term interruption that happens, inflation will continue. Oil will continue to go up. Oil is having quite a run here, very strong. And what I will do is I will just look at West Texas Intermediate crude, and you can see that it's hitting $100. It's basically in the 90s. It's way up there. This is where we're at. If this thing spikes up, you could expect bonds to spike up. And if I looked at TLT, go here, see what happened is when we, right here in March, this is critical in this area here, March. This is critical because what happened here is this is when they were shutting down the economy. Like I remember I was like, oh, I'm going to Fiesta Island with my kid. Like we're shutting it down. Like everyone get out. There's a cop there telling people to get, like, what the hell? I mean, they just shut down everything. So basically when you see that kind of volatility, you see the precursor moves where, things are happening bad. People that are getting ahead of it realize something's going on and they're buying bonds, they're moving money into bonds. And then it spikes as things actually happen. It goes to bonds. And then here it reversed. It really reversed, but it stayed up for a period of time. You have many months where it stayed up and then it finally had to come back down to something maybe more reasonable. So that's what I see going on right now. Talk to you later. Thanks for stopping by.